liquidity, the price rolled over, and you got the top edge sell. So another scratch trade, worst case, another winner, and that's that. It's that fast, guys. It's that fast. So we got the top edge sell. You see it ran the stops, ran the top edge, got a quick profit, and obviously on this occasion we've been scratched out at +1, so no profit on that one. And that's okay. We don't always make profits, but we didn't lose money either, and that's the good news. We didn't lose any money. Is Max reselling it? No, not yet. Not yet. The value's gone out the trade, so Max is not going to try and resell it. So until the value comes back in the trade, there isn't a top edge sell for Max at this point. Is that going to be a bad decision? I don't really care. It's the decision that Max made, and not to resell the 55s, and so be it. So that was a scratch, guys. No improvement on our 146 ticks profit at the moment, and 146 points profit. No improvement on that trade so far this morning. Gold, I don't see anything, Paul, developing, do you? I don't see any opportunities just yet. The last trade was a good rip to the downside. There was a good possibility of a buy-side reversal in here. I don't know if you took that buy-side reversal. It was a challenge, but certainly value in it. So there was a nice opportunity at that stage to work back against the trend here with the real yields starting to rally. And that would have been a reasonable proposition down there, yeah? Yes? No? Yes? Absolutely, yeah. So, yeah, I can agree with that. And obviously up through the top edge, when it pulls back, unfortunately, on this occasion, the dollar's gone against you. Into the top edge, I don't really see huge value in the short. But obviously you can see into the top edge, I don't see huge value, but there might have been a squiff of value just to try it, but nah, not for me on this occasion. So currently flat gold at the moment. You can see even when Max doesn't do trades, the trade still works out, guys. So you can see the retest. I was watching it to see if Max would generate a sell trade, but even when Max doesn't resell the highs, the trade still works out as a short trade. But on this occasion, Max didn't sell again on this spin higher, and it's left. I had a funny feeling it was going to do that because Max was looking for the sell, but suddenly just quickly switched off. And by the time it switched back on again, the price had already gone, so missed the trade. So that's a little bit unfortunate because that would have been a nice little extra, a little Brucey bonus. A lot of people are wondering about the gold today, the oil today, and if you look at it at a macro chart, you would get a good feeling for the sell that was developed today, and I don't think anybody would have questioned except for the short-term value. And this is why you've got to do macro valuations, guys. And you look at this oil. Is there anybody that thinks we should be buying oil just now against the calendar spread? Anybody thinks we should be buying oil just now against the calendar spread? I don't think there's anybody in the room would say, oh yeah, give me some. This looks like a brilliant trade opportunity, right? So I don't think there's anybody in this room. Not that anybody's replying, but I don't think anybody trades oil except me and Sammy anymore. But I don't see any reason why anybody would be selling this on a macro scale. And it's enhanced even further by looking at the Brent WTI spreads. If we look at Brent spreads, well, take a look at how much calendar spread is on the short side. I mean, look, is there anybody that would go long oil with a calendar spread dropping like that? Seriously, what the hell, right? So on a macro scale basis, there is no question about this being a sell. Now you've got to find what that macro level is. How can you find a macro level, guys, on a 1 minute chart? This is a 1 hour chart. And it's squished in. It takes in all of March and all of April. So this gives us an idea about how much value you have to try and find as a big macro trader, right? So we can see how much value is in this higher print. But that higher print is about $1,000 deep. Do you know what I mean? On a 1 minute chart, that's several days worth of business up here potentially. So you can recognize the commercials area up here goes from the 28th of April to the 30th of April. It's almost 48 hours of selling by commercials. 48 hours of selling by commercials, not a 1 minute candle at the top edge. 48 hours of short selling into those high prints. So when you start considering and understanding that, and you start zooming down into these lower time frames, we don't need to have the value on the charts at this stage, but you'll get a couple of good ideas. Now, number one, we can see the spike higher from this value line. So there's a value that builds here. Well, when that value builds, of course, you're expecting higher prices. When you get higher prices, guess what the commercials are doing, guys? They're selling here on almost every single, say, 5-tick price areas. They're selling here. If I just sell the close of each candle, they're selling here. They're selling here. They're selling here. And they're selling here. That's what a commercial does. They sell aggressively through that whole phase. If you look at that phase as a commercial seller, you see from the volumes, that's exactly what the commercials seem to be doing in terms of short volume, getting shorter and shorter and shorter into the US NYMEX Open. And isn't it surprising that the high of the day turns out to be the NYMEX Open? Does that not give you some sort of kick in the backside where it says, wait a second. So in other words, what they've done is they've taken the price higher the whole morning to get the biggest volume at the highest price. My goodness, that sounds like a controversial idea. They've taken the price higher all the way through the morning session to get the biggest volume at the highest price. How many times have you heard me mentioning volume and value at price? So if I want to buy the London Open, I'll be selling into the London Open. Well, when I say selling, I'll be pushing the price down into the London Open to buy into it. If I want to sell the US Cash Open, I'll be driving the price higher to sell the US Cash Open. And this is a perfect example of that process. And obviously, when you're thinking about the volumes, think about what the volume's doing. So if I said, right, there's the first sale there, how much volume was in that? Very, very small volumes, right? How much volume was in here? Bigger volumes. How much volume was at the top edge? Biggest volumes. In other words, you're layering in at the highest possible price as a sell. How many times have we mentioned that that's what the commercials do? How many times have you saw us drawing a chart that shows this exact arrow type picture? Small buyers, biggest buyers, or small sellers, bigger sellers, biggest sellers. And obviously these trade narratives have obviously resulted in today's massive markdown out of this area. And we can see as the value builds, look at what happens. The price drops down off of these highs. We still know that this is the value area here. But look at what happens in the last sequence. The value is still above here. Oh yes, the value is still about the same here. The value is now equal to here, so the value is now dropping. Remember yesterday's classroom? And then we start seeing the build of value into this lower bracket here. We spend a little bit of time at the top edge for the spring here, and then boom, straight south. The Brent spreads, of course, in the background are doing this, straight south off the Brent spreads as well. This is a better example because obviously you can see that on a shorter term time frame. So you can see that the spreads are working really hard for that top edge short to evolve, and sure enough, the top edge short does evolve and you get this blistering attack to the downside, but it's not on a 1 minute chart, is it, guys? This sell evolved over several days, well, basically 24, 48 hours. You've got to make sure you don't forget about this type of stuff. It's easy to get sucked into your 1 minute charts and think you're seeing the whole world of trading in front of you. And you're seeing feck all, you're seeing a tiny little microcosm of the global kind of bigger picture that's developing in the background. So you've always got to remember to go back out and have another look at the bigger picture.